Have you ever wondered how to make your money work for you? It's a compelling question, isn't it? And it's one that has intrigued thinkers, dreamers, and entrepreneurs for centuries. You see, money is not just a means to purchase goods and services, it's much more than that. Money is a tool, a powerful instrument that, when wielded wisely, can generate more wealth. Yes, you heard it right. Your money can earn money. It's an idea that may sound a bit strange at first, but it's a concept that has been proven time and again. It's about understanding the potential of your money and knowing how to unlock it. It's about mastering the art of making money from money. So, are you ready to learn this art? Are you prepared to make your money work harder than ever before? Stick around as we delve into the steps you can take to make your money grow. First, we need to understand the importance of financial literacy. To put it simply, financial literacy is the ability to understand and use various financial skills, including personal financial management, budgeting, and investing. It's like learning a new language, the language of money. And just like any language, it can be used to express ideas, navigate new environments, and most importantly, to understand and be understood. Why is it important, you might ask? Imagine setting off on a journey without a map. You might have a general idea of your destination, but without a clear route, your journey could be filled with unnecessary detours and dead ends. Financial literacy is the map that leads you to your financial goals. Let's break it down a bit further. One of the fundamental parts of financial literacy is understanding how money works. It's about knowing the difference between assets and liabilities, the impact of inflation on your savings, and the power of compound interest. It's about realizing that money is not just something you earn and spend, but something you can grow. Next, we have the principles of investing. Investing is essentially buying assets that you believe will increase in value over time. It could be stocks, bonds, real estate, or even a startup business. The aim is to put your money to work in more ways than one, creating multiple streams of income. Then there's saving and budgeting. This isn't just about putting aside a portion of your income each month, it's about planning for the future, preparing for emergencies, and making sure you're not spending more than you earn. It's about taking control of your money, rather than letting it control you. These are just the basics, but they form the foundation of financial literacy. The more you understand about these concepts, the better equipped you'll be to navigate the financial world, make informed decisions, and ultimately, grow your wealth. With solid financial literacy, you can make informed decisions about your money. Let's talk about saving and budgeting. You see, it's the first step towards making your money work for you. It's the foundation upon which your financial empire can be built. And it's not as complicated as it sounds, I promise. Imagine your income as a river. Your expenses are the various channels this river flows into. Some channels are necessary, like food and housing. Others, not so much, like that fancy espresso machine you saw on sale the other day. Saving and budgeting is all about controlling the flow of this river, ensuring it goes where it's needed most and not where it's simply wasted. Now let's talk about saving. It's not just about stashing away every spare penny, it's about being smart with your money. It's about prioritizing your needs over your wants. It's about delayed gratification and understanding that the money you save today could be worth a lot more tomorrow if invested wisely. So start by setting aside a fixed portion of your income every month, no matter how small. It's not the size of the savings that matter, but the habit of saving itself. Next comes budgeting. It's your financial blueprint. It's a plan that outlines your income and expenses, helping you understand where your money is going and where it could be better used. Start by listing all your sources of income and all your monthly expenses. Then, prioritize. Identify areas where you can cut back and areas where you can't. Remember, a realistic budget is one that you can stick to, not one that leaves you starving at the end of the month. And finally, automate your savings and budgeting. Use apps and tools that automatically set aside a part of your income for savings and help you track your expenses. Because when it comes to money, out of sight is definitely not out of mind. So, start saving, start budgeting. Give your money a purpose and a direction, and most importantly, give it time. Because the magic of compounding works best when given time. Remember, every dollar saved is a dollar that can be invested. Now that we've covered saving and budgeting, let's move on to investing. Investing, in its simplest form, is about buying an asset with the expectation that it will increase in value over time. It's a method of making your money work for you, rather than simply storing it away. It's a key to wealth creation and financial freedom, yet it's often misunderstood or feared by many. There are different types of investments, each with its own potential risks and rewards. Let's start with stocks. When you buy a stock, you're purchasing a small piece of a company. If the company performs well, the value of your stock may increase, and you can sell it for a profit. However, if the company doesn't do well, the value of your stock may decrease. Bonds, on the other hand, are a type of loan you give to a company or government. In return, you receive regular interest payments and the return of the initial amount at the end of the bond's term. Bonds are generally considered safer than stocks, but they also tend to yield lower returns. Real estate is another popular investment. It involves buying property and making money through rental income or selling the property for a higher price in the future. However, real estate can require significant upfront costs and ongoing maintenance. Mutual funds and exchange-traded funds, or ETFs, allow you to invest in a diversified portfolio of stocks, bonds, and other assets. These funds are managed by professionals and can provide a way to invest in a wide array of sectors without having to pick individual stocks or bonds. Each type of investment carries its own set of risks and potential rewards. It's important to diversify your investments to spread out risk and potentially increase your overall returns. Remember, investing isn't about getting rich quick. It's about steady, long-term growth, and there you have it. The basics of investing. It might seem complicated at first, but with time and patience, you can learn to navigate the world of investing. Investing is a powerful way to make your money work for you. Another way to make your money work for you is through passive income. Now imagine this, you're sipping a cocktail on a sun-soaked beach, your toes wriggling in the warm sand. Meanwhile, your bank balance is steadily ticking upwards. Sounds like a dream, doesn't it? Well, that's the power of passive income. At its core, passive income is money that you earn without having to actively work for it. It's like having employees who never sleep, never take breaks, and never complain. But instead of human workers, these employees are your investments, your assets, your ideas. Let's delve into some of the most common sources of passive income. First off, rental income. If you own property, you can rent it out, and the rent you receive becomes your passive income. You're earning money from an asset you already own, without having to trade hours for dollars. Next, dividends. When you invest in a company's stock, you're buying a piece of that company. And as the company profits, they might distribute a portion of those profits back to you as dividends. Again, it's money earned without you having to clock in and out. And then, we have interest. If you have money in a savings account or certificates of deposit, your bank pays you interest. While interest rates are generally low, every little bit helps. And it's money earned by simply letting your money sit in the bank. There's also the realm of digital products, like ebooks, online courses, or music. You create the product once, and then every sale becomes a source of passive income. The beauty of passive income is that it can free up your time, allowing you to focus on what truly matters to you. You could use that time to create more sources of passive income, or you could use it to enjoy life, to explore, to learn, to grow. Passive income isn't a get-rich-quick scheme. It requires upfront work, smart decisions, and sometimes a bit of luck. But once the ball gets rolling, it can contribute significantly to your wealth growth. Just remember, the aim here isn't to work for money, it's to make your money work for you. Passive income allows your money to grow even while you sleep. To sum it all up, we've embarked on a journey through the fascinating world of financial growth. We've uncovered the importance of financial literacy, a skill that empowers us to understand and navigate the complex financial landscape. We dove into the art of saving and budgeting, two crucial habits that lay the foundation for financial success. It's like planting a seed. It may seem small and insignificant at first, but with time and consistent care, it grows into a robust tree. Then we explored the realm of investing, a strategic move that allows your money to work for you. It's akin to setting your sails and letting the wind carry you towards your financial goals. And finally, we discussed the concept of passive income, the golden goose of financial growth. It's the stream that keeps flowing, even when you're not actively paddling. So there you have it. Making money from money is not a myth, it's a reality that you can achieve with knowledge, discipline, and smart decisions. Start today and watch your wealth grow.